Neil?
Kevin?
Big week ahead?
Well, as you probably realise, I've called him Kevin after Kevin Keegan. If anyone wants to email us to think why does Bradley look like Kevin Keegan, there will be a prize at the end of it.
Just showing off that I have some hair, Neil.
Exactly. However, it does look like a syrup.
So, more serious matter this week. Well, T-bonds really.
Yeah, quite weak data-wise. Obviously, bank holiday yesterday, Washington's birthday, Chinese New Year. T-bond yields. Anyone under the age of 30 would not know what they are. Basically telling us there is a whiff of inflation in the air, which Biden and Powell both mentioned. Therefore, with yields 10-year yields up at 1.5, it's telling us that although interest rates are zero, the yields of which the government to pay are higher.
Yeah.
Why are they higher? Do the government have to raise money? Sunak in the UK, budget March the 3rd, has to find £60 billion to pay for all the furlough and obviously Kevin Keegan haircuts. So they want money. So therefore, basically tells us if the yields are higher, the government bonds drop. T-bonds, JGBs, German bonds, German bubble, 2-year, 5-year, have all been hit.
So what you're telling us, there's real signs in the bond market that inflation's coming.
It is around the corner.
Prices are going to
and the central banks are aware of it.
Yeah.
But I think Biden said he's happy for the market to overheat. The argument you've got is that inflation isn't like water. You can't turn it off at the tap.
Yeah.
It's a bit like fog. When it descends, it hits you, and then you have to wait till it drifts past. So it'll be interesting to see that they can control it. And obviously, the best way to control inflation is to raise interest rates.
Yeah, and for the stock market, raising interest rates is obviously bad.
At the moment, it's not affecting it.
Yeah.
In a way, I think that's probably why the stock market's fairly muted, although they're all-time highs.
Probably because we're thinking ahead of the game here, really.
Yeah, in a way, that's what the bond markets are. If you go back years and years, pre-2008, the bond markets led the way. So ignore the bond yields at the peril.
How long did it take before the market then reacted?
It was interesting then because interest rates obviously weren't zero. They were like 4 or 5%.
Yeah.
So you've got yields going at 6-7%. That's quite in that. Can you get 6-7% from the stock market?
Sure.
Yeah. So at the moment you'll probably get better returns from the stock market.
Yeah.
At the moment.
Yeah.
So be aware of it. Also, on retail platforms, the spread on the government bonds is wide.
Okay.
Hence, it's not that attractive. But keep your eyes open onto it,
Yeah.
because everyone is talking about it, and obviously the Kevin Keegan haircut.
And moving on to the rest of the week.
Better
Any
later in the week.
Yeah.
Nothing. Fairly quiet this week. Not just we said earlier on the Chinese New Year, but half term. It's a nationwide, worldwide half term.
Okay.
So it's a very quiet week data-wise,
Yeah.
and I think we went through that earlier in the week that if you were going to take a week off, this is probably a week to take off.
Yeah. Possibly some stocks to look at.
Yeah, but yet again, if there's nothing there, don't trade it.
Mm-hmm.
Have a quick look at the British pound.
Yeah.
Highs.
FTSE pound rally, really.
Weird, yeah.
Yeah.
I think that's a weird one that a lot of people said, why isn't it working? The inverse, is it because we've got the best vaccines in the world? Maybe that's the case.
Brexit.
Yeah.
Looking good.
Yeah.
Cheers now.
Thank you, Kevin.